9 o'clock. Perfect timing. Yes, only a
Happy
dork would actually do that, but I do that.
Happy Friday.
Happy Friday. Say hello to my puppy. Hi, baby.
The pony.
Pony, my little pony. Joe, I had an epiphany this morning.
Yes.
It's May 1st.
It's May Day.
So May 1st, after May comes June, which is halfway through the year. I
Yep.
still have a hard time writing 2026.
I know.
And I
And
noticed that the coolness is gone. The humidity is back. I sweated like crazy this morning.
yeah, the car's hotter when you get in it now.
No doubt about it. But what does the old saying, April showers bring May?
Commission
Well,
checks.
commission checks. But we didn't have any rain, April showers, but we're still getting commission checks.
Yes. Yes.
So all is well. All right, this is Master the Contract Friday, right? And we just have little issues that pop up. But I was thinking, I start today. I signed up for that AI boot camp with Tony Robbins, and the breaking thing is today. And what it's going to teach me to do is how to train the AI to think like I think. So it can
Right.
answer questions for me or handle routine tasks for me. And that's kind of what we're doing with our training classes. We're
hmm
teaching agents how to think the way we think. Now, we're not saying the way we think is the best way. I think it's the best way. We think that way. But there's other ways to do things, and different people see things different ways.
Right.
And sometimes we choose the harder path, right? Because I hear stories about other agents that just don't have due diligence, and it's just not a good thing.
Mm-mm.
So I reorganized the list I sent you last night. So we'll start with number one.
Okay.
Um, and number one is just like a public service announcement. I got an
Mhm.
email yesterday from, I forget who it was now, it doesn't matter. But it was this is a new thing going around. Consumers, fraudsters, are sending emails saying they saw your listing, they'd love to talk to you about it. Could we do a Zoom meeting today at 1? And they send you a Zoom link to meet with them at 1. Yippee, this is a great customer, right? They saw my listing, they're interested, they want to Zoom with me. They're fraudsters.
Except
Okay.
when you press their link, they want you to download something, and that's the no-no.
Well, don't even press their link.
Don't even press the link.
Now,
Yep.
really, I'm going to talk to you about this in the near future because we have a cybersecurity thing going on, cybersecurity defense system being built for us. And it's going to require some changes to you guys and your computing too. You need to have antivirus and anti-spyware software. So the
hmm
agent who sent me this, when she got the email, it opened up and it said, warning, suspicious activity. Do not click this link. It could harm your computer.
Yep.
Because if you click that link, they're going to try to get you to download something that's going to get access to all of your files and then start spoofing you and sending those to your customers saying, hey, the wire instructions have changed. Please send your money here instead. And now we're down a rabbit hole and we're getting sued for millions of bucks.
hmm
No, we just can't let that happen. So please, 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 100% do Zoom meetings, but send them a link to your room.
Right.
That's why we pay for your Zoom room because it's safe and secure and behind our safety protocols,
Our wall. Yep.
right? So that's just really, really, really important. And it's a shame that it's happening, but it is happening. I'm not trying to scare you. I can show you a screenshot the agent sent me. It's there. There's no need to get into that. So that was,
One of the agents in my office had four of them the other day.
yeah, it's a thing. It's a real thing. And if you don't have it now, you probably don't have enough listings. If you get more listings, you'll get more fraudster attempts.
Mm-hmm.
Okay. Joe,
Yes,
we covered the contract pretty extensively over the last couple of weeks.
we
So I
have.
should know the answer to these questions, but Chris, I say this all the time. Chris said it the other day too. It's hard to read the prescription when you're inside the bottle,
Yeah,
right?
very true.
So, and that it's just an old saying that kind of works. So we get nervous in our day-to-day practices. So let's say you, Joe, have a listing, it's
hmm
under contract, the
Right.
inspections are done, everything's good, we repaired everything, and here it
hmm
comes a week before closing, and the stove breaks.
hmm
Okay,
Yep.
or the refrigerator, or the garbage disposal, or something. What does
Something.
the seller have to do, and why?
Well, the seller, according to paragraph 11, has to maintain the property in the
Uh-huh.
condition that they bought it, the condition that it was the day the buyer put the contract in,
Because it's an as-is contract.
because it's an as-is contract. And in the other contract, the same way. I mean, they both have paragraph 11. So Something isn't fixed, so they have to fix it and or replace it. And
What do you have to replace it with?
something like kind.
Like kind. Specifically, it says that, like kind.
Yeah,
So you can't, let's say you got a year 2010 refrigerator and it breaks. You can't go find a used take the one out of the garage and put it in the kitchen.
right.
No, it's not like kind. But then there's another solution too that may be more friendly
Hmm.
or kind. And what might that be?
Well, transparency, I think, is the biggest thing. So you got to call the buyer agent and say, hey, listen, we have a problem. The refrigerator died. The compressor's $900. We can fix it, but it's also a 10-year-old refrigerator. Would your buyer rather have a credit of $900 and go buy a new refrigerator?
Correct.
But the
Okay, Mark.
transparency is important because you don't want them walking through at walkthrough and they notice the refrigerator is different. Then it's going to send off a lot of bells and whistles at the
Well,
walk.
that's my old story, right? The cooperating broker is a friend, not a foe.
Hmm.
So if you keep in the dark and feed them shit, they're gonna act like a mushroom. We don't want to do that,
No.
right? Enlighten them, say, hey, look, we have a problem. We're going to own up to it. There's two
Yeah.
options. We're required to repair it. We'll fix it for $900, but then we're going to fix a 10-year-old refrigerator or stove or whatever the appliance is. Would your buyer rather have a credit and go pick out what they want? Maybe they want the new touch-free stainless steel or the black
Hmm.
or the blue or the white or whatever they want. So give them that option. And then, the agent that I was talking to yesterday said, but, this was a very contentious negotiation. Well, in my opinion, this makes it a little less contentious because now you're giving them options because you're going to do it. You're going to fix it. It's just,
Right.
would you rather give them an option or not? If they say, no, just fix it, then fine, we'll fix it.
If the buyer has a problem with transparency and honesty, then they have the problem. It's
Mhm.
oh yeah.
Okay, so the key there is the Beggins agents have contract mastery. They understand there's a maintenance provision in the contract. And with
Hmm.
confidence, we can tell the seller, hey, you have a maintenance obligation and you have to maintain the house in the condition that it was at the time of contract. Time of
Hmm.
contract refrigerator worked. And now it doesn't. So you need to put it back into working condition, replace it with something similar, or we could offer the buyer credit.
Right.
Which would you like me to do?
Right.
But see how confidence just flows when you understand the contract and don't have to second guess yourself, right? Because you memorize the provisions. You don't have to read the prescription on the outside of the bottle. Very cool. Okay, Joe, you and I talked about this. You said it's never happened to you yesterday, but it does happen that buyers run around to new home sales centers. They fall in love with the house
Hmm.
and they think of you because you've been, back to our training, using your database, staying in touch with your customers. They think of real estate, they think of you. And it happened to one of our agents that got caught in this situation. The buyer came up and said, hey, I found a house. I don't really need an agent, but they're paying me
Hmm.
commission. Will you do it for X?
Right.
And the agent called me for permission, and I gave her some advice. And the first advice is you have to understand the builders are a different breed of cat, right?
Hmm.
Commission to
Yes.
them is not a closing cost. It's a marketing expense.
Right.
So when you look at Homes by West Bay, for example,
Hmm.
do you see a lot of TV ads for West Bay?
A few, but not many.
Do you see many radio spots? Do you see a lot of advertising?
Right. Right.
No, they do what's called variable advertising. They only pay if it works.
Yeah.
So they build into their budget a marketing fee, and that includes a realtor buyer agent commission. And
Right.
oftentimes it includes bonuses and buy down incentives and all that stuff.
Hmm.
So the first thing to make sure the buyer understands is they're not going to get a discount if they don't use an agent because the builder's
Right.
not going to do it because the Hawthorne model is 424. If they get it to you for 418, they just shot themselves in the foot because the next Hawthorne model is going to appraise at 418.
Right.
So it's just not going to happen. So if this is a friend of yours, have that honest conversation. Say, look, it doesn't make a difference. Marketing commissions are not an expense to a builder. It's part of their marketing cost. It's built into the budget on every house. You're not going to get a discount. Now, that being said, they're your friend. If you feel like you want to give them a rebate, a loyalty credit, or whatever you want to call it, you're free to do that. Let's get it. Let's face it, we weren't going to get anything,
Right.
right? So let's not cut off our nose to spite our face.
Right.
But you have the power to do it. Just try to get as much as you can. And that's
Mm-hmm.
called negotiating, right? Understanding the process and how things work. And
Right.
that is true. Builders don't mind paying commissions. They like it because it means they get a sale.
Right.
If you don't pay a commission, they don't have a sale.
Right.
And that's kind of the mindset how it works. So as long as the customer understands they're not going to get a discount, then it takes some of the pressure off because but you can certainly give them a percentage of your commission if you want to.
Mm-hmm.
But try not to. And if they're really a friend, when I built my first house, the builder was a good kind of a con man salesman type of thing. But he said this line, and I'll never forget it. He said, Craig, if I can't make money off my friends, who can I make money off of? And I'm like, shit, how do you argue that one, right? Come on, Joe. If I can't make
It's
money off my friends, who can I make money?
it's hard to do that. Yeah.
Yeah,
The
well,
one thing the one thing is we were discussing yesterday, the minute you get tied to a contract, let's say for instance, Craig calls me, I found this Lennar home. Um, the the circumstance that I saw because sat on the grievance committee is
oh, good point. I'm glad you brought this up.
Lennar called an agent and said, we're at a point where this buyer needs more money. So are
Mhm.
you willing to be their agent and give them some of your commission to help them with closing cost? And then you can be, they can buy this house. And the agent's thinking, oh, well, yeah, it's no skin, sure, just as you said, Craig.
Well, let me back it up
Yeah,
because the builder's paid a commission no matter what.
right.
So,
Yeah,
but
so
the buyer
they,
can't buy the house unless they get an agent. And sometimes a builder, if you got a good reputation with a builder, will call you and say, hey, Joe, I got a customer who's non-represented. I'll give them to you, but you got to give us a rebate so I can get them qualified.
right.
That's what you're saying in English,
Yeah.
right?
So in this instance, the agent said, sure, no problem. Well, the buyer didn't really have a good relationship, I think, with the builder. And then they got in the house and there were problems. And they came back to the board and said, hey, Bob was our agent and we gave him money and he didn't help us with anything. And he didn't give us an option to do a inspection. He didn't do this. He didn't do this. And the board kind of slapped the agent because you are represented regardless of how that works. You still own the ownership of
You
helping
are
the
a
client.
transaction broker and owe
Yeah.
responsibility duties to every consumer you represent,
Yeah.
unless you have a notice of non-representation.
Correct.
Right? Lauren just typed into the chat and said, how is that ethical? It's totally ethical. The builder wants to make a sale. The
And that
builder,
money that money's coming out of a different fund, so they can't pull it out of they had no more money in their
they can't lower their price because they're going to
right.
screw all their comps. So they
So
take the
they're
commission dollars and give it to a friendly agent and say, hey, we'll give
mhm,
you this thing, put you on the deal. But I think what Joe's saying is if you take a commission for a deal, you better work the deal
mhm,
or have a notice of non-rep,
right,
right?
right.
But I'd say work the deal because you want to get the past client in your database, do a good job so they love you, know you, like you, and trust you, and then do business with you in the future.
Yeah, and how hard is it to communicate with that new buyer, make a friend because that new buyer may have a friend who wants to buy in that community because they bought and you can help
Yeah.
them. So, yeah, get more business.
Yeah, this one will tell two friends, and this one will tell two friends, and this one will tell two friends, and sure enough, you got a whole network of people that are looking to refer business to you. All right, Chris just repeated what we said earlier.
Yep,
Commission is made from a
exactly.
marketing fund, not on the home sale.
Right.
Very interesting. Well, that was number two.
Hmm.
We're going to try to get to 7 steps today. Number three, this happened to me yesterday, and I came up with a really good solution I want to share with you. I closed out a piece of property yesterday, and they asked me for my wiring instructions. So I called my bank to get my wiring instructions because it's an overseas purchase. And my bank said they acted like they were going to give it to me. And I said, no, 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 I don't want you to send me anything. He says, do you know your account number? And I said, yes. He says, good. I'm not going to ask you for it. And he gave me the SWIFT code and he gave me the international wiring routing number.
Right.
And then he told me I had to put my name, my address, and my account number in it, his bank's address, and that their information. And so I did that. And I'm like, shit, how do I send it to the attorney overseas?
Mhm.
And the attorney said, just put it in a PDF. And I'm like, no, that's got my personal account information on it.
Right.
I'm thinking, how can I do this safely? So I typed it up in Google Docs and I printed it as a PDF and I
Mhm.
uploaded it to .loop and I sent it to her in .loop,
Right.
right? So it
Because
was me sending to
it's
her. She had to upload it. Boom, she got it. She confirmed she got it. What a neat way to do things, though.
because
Because
it's password protected. So
yes,
yeah.
and I had to invite her into the document, and she had to accept it. So just a neat way to do things. And I'm
Hmm.
glad I thought of it. And the bank was responsible. They gave me the generic SWIFT code for the bank. That was simple, but not my information. I had to have that myself.
Right.
And I do have password on my banking accounts that anytime anything transacts, they have to ask me what my password is. And honestly, they forget to do it a lot. But that is an option that you do have. So remember, .loop is another, we were talking about cybersecurity, right? A
Yes.
lot of our security protocols rely on us using .loop because those things never hit our servers and can't be shared or stolen.
Hmm.
Okay, so that's a quick one. So that was number 3. Number 4. Oh, this one was interesting. I had to go to my inbox for this one.
Okay.
I didn't. This one came up after you and I talked yesterday.
Okay.
Um, okay, I'm going to read this, and we're going to talk about proper protocol.
All right.
Hey, Craig, I realized after the escrow agent sent an email about confirming commissions to the agent that the listing agent is making 3.5% and we're making 2.5%. That's fine. Commissions are fully negotiable,
Mhm.
right? It's a Zillow transaction. We're representing the buyer, which means we're paying a referral fee and getting a lower commission. When I first called the agent before sending out the offer, I asked how much is the seller offering to offer to help buyers agents commissions. And she told me 2.5%. Okay, that was the way it was recommended in the beginning, but we're kind of going away from that now. It doesn't matter what they're offering. It matters what our buyer broker agreement says.
That's right.
Um, so I learned today, this is the agent saying again, send the offer regardless and always ask for 3%. It doesn't matter if they say 2%, and especially when the agent says it's a broker to broker referral, because the broker is determining how much they're willing to send the other agent. Interesting. So question to you, Craig, are we allowed to ask listing agents straightforward how much they negotiated, or is that not our business? It's not our business. And really, your life will be much simpler if you just let go of the control mechanism and say, hey, I don't care what you're offering. You can list for 1%, like a lot of people do. And I'm going to get my 3% because that's what my BBA says. And my offer is going to be dependent upon that because I'm going to make it, I'm going to use addendum FF in the
Right.
process.
You DMF or do GG and add the compensation agreement.
Either
So
one.
either way, but I don't really care what the buyer or what the seller is offering. I'm telling them what my buyer would like.
Yes. Which means
Okay.
we got to get really sharp on our buyer presentation so we convince our buyer to sign a BBA 3%.
Yeah.
And we'll negotiate if we have to.
Yeah.
But we can go in strong saying, no, my buyer owes me 3%. We want you to pay it. I'm assuming she was being sneaky, but this agent has been controlling and demanding and constantly answering on behalf of her client without asking her client first, which I have to remind her politely, please ask your client and let us know
Yeah.
about everything we talked about. Anyway, I wanted to share this as a reminder for fellow agents that it's not okay what she did, but it was my fault for not asking her 3% upfront, regardless of her answer. I agree with that statement wholeheartedly.
I think we need to remember is the seller has no obligation to pay any buyer commission.
No, none.
There's no obligation of the seller to pay any of the buyer commission. That's why you have a BBA. So if the seller is willing to pay, that's part, that becomes part of the transactions, part of their bottom line. So make your offer accordingly.
Yeah, so that's the key. Get your BBA strong, negotiate that strong. No seller's going to let a sale go away for 0.5%,
Mm-mm.
unless you're trying to lowball them and then they're going to get pissy, right? But if you come up and you demonstrate with comps and you show the value and their net is their net, that's all we're negotiating now is a net,
Right.
right?
That's
If you're
right.
asking for closing costs, you're asking for prepaids, you're asking for interest rate buy downs, you're asking for closing costs for buyer's agent commission. It's all just in a lump sum
It,
of what's
it's
going to
all
deficit the net proceeds.
you said it, Craig. It's all about the net to both parties, right? By the way.
Yeah. Yeah, the one I just closed on yesterday for myself personally, The seller, myself, had to pay the commission. That was 10%, non-negotiable, foreign country. Then I had to pay a 12.5% value-added tax on top of the commission that I had to pay to the broker. Then I had to
Yeah.
pay my lawyer 2.5% of the purchase price, and I had to pay value-added tax of 12.5% on top of that purchase price. And I'm going, holy cow! I was going to say shit, but I'm not allowed. Holy cow! How backwards is that compared to what we're doing nowadays? I'm expected as a seller to pay a 10% commission to the buyer's agent. And my brain doesn't think that way anymore because we've been doing this for 2 years.
Right.
Buyer pays buyer's agent, seller pays it. Now, if they'd asked me to pay for it, I wouldn't do it. But it's just when in Rome, do like the Romans do, you know? Anyway,
Yep.
all right. Our big topic for today, I got two things after this, but our big topic today, and it's coming up a lot, and I think we need to make sure we're super clear on it. Short sales as a pre-listing issue, what do we do first? So an agent called me yesterday. They've been marketing a house. The seller has stopped making payments. The seller has equity, had equity. The house was under contract. They stopped making payments. The contract fell through. They continued not making payments. So, Joe, I want to make sure everybody understands the process.
Okay.
You miss a payment, you get a late fee. You miss two payments, you get another late fee. You miss three payments. Uh-oh.
You're probably going to get less pendants.
You're going to get a notice of default.
Yeah.
And they're going to serve you a lis pendens, which is a Latin term for intent to sue.
Right.
Right? Okay, let's understand this too. Everybody says, well, Wells Fargo is my bank. Fine. Wells Fargo was your loan originator.
They're your
servicing.
They're your servicer. Yeah.
Right. So it may be Wells Fargo's servicing loan. That's the servicing department, not a lending department. Or they sold that loan to Chase and Chase is servicing it, or they sold it to New Res and New Res is servicing. There's a servicer. And the servicer doesn't own the loan. All they do is they get paid to collect the monies and forward them to the correct party. Right? So Joe makes his payment, sends to the servicer. Servicer does what they do, keeps their piece, and sends it to the lender.
Right.
Right. So now when Joe doesn't make his payment, the servicer doesn't get the money. The servicer has to report to the lender, hey, Joe didn't pay. Month one warning, month two warning, month three, lis pendens, intent to sue. Right. Once you hit that third month, you can't just make up one payment at a time. They do a full sale, get them with all three months payments, which most people can't do. So now they're down the road, and now they're getting late fees, penalties, and accrued everything else.
Yep.
So if I'd owed $250 on the house, now they owe $270 in the house. Next month they're owe $275 in the house, and it's going to keep going up. And pretty much that equity they had is gone.
Right.
Right. So now we're at our asking price. The market hasn't been growing exponentially, and there's not enough net proceeds to pay off the new mortgage. That is the definition of a
short
defaulted loan. Not quite a short sale yet, because the short sale, the most important thing, and you goes, Joe, you and I talked about this last night. We did short sales different. You didn't work for us back then.
No.
And you were telling me that you did what most agents did, is they managed their own short sales.
Yeah.
You want to just give us a quick 30-second, how much fun was that?
Not fun at all, because by the time you collect all the documents that are needed, all this bank statements, they have to come up with a letter of why a hardship letter, and their bank statements and their W-2s and their 10, it's 100 pieces of paper, which then you have to put the loan number on every piece of paper, and then you have to put all this package together and fax it over to the lender, and you do it 3 times because they can't find it for 3 times. and
back then, in this like 2008 through 2011, it was crazy.
It was horrible.
You don't just get granted amnesty in a short sale. You have to prove your hardship.
No.
So it's almost like qualifying for a loan, except it's proving that you qualify not to make payments.
Right.
So they give you a hardship, all right, and avoid foreclosure and take the house back in lieu of foreclosure rather than going through foreclosure. Still a ding on your credit, gonna hurt for a short period of time, but you'll recover.
Right.
Right. Better option than foreclosure. All right, so this house is on the market. They're gonna go into foreclosure. We assume the bank is cash for keys is another term.
Mm-hmm.
They assume that the short sale is going to be granted.
Right.
There's no assumption, especially in today's market. Back then in 2008 and beyond, we did thousands of short sales in that period of time.
Yeah.
All
Yeah.
right. Now the way we did it is because here's what happens. Joe does all this work and pesters a servicer for
Mm.
weeks or months trying to get them for an answer while they're trying to decide, do I want to give Craig a break or not? And
Yeah.
they finally come back and say, yeah, we'll give Craig a break.
We'll accept the short sale.
We'll accept a short sale. Make sure we net 265.
Mm-hmm.
Right? So you do your math backwards and you know you got, if I get the net at 265.5, I can sell this house. It'll be short on the mortgage, but the bank will agree. And then we put it on the market at 300, make sure we net them their 265, and we have an approved short sale and it goes. But while Craig's buyer is waiting to buy Craig's house, time is passing. And the bank didn't make, the servicer didn't make the approved decision in a timely manner. So buyer number one walks away. So we
Right.
put it back on the market, sell the house, oops, wrong finger, put it back on the market, sell it again.
Right.
Buyer waits and waits and waits, doesn't get an answer, buyer walks.
Mm-hmm.
Put the house back on the market. So now Joe sold it 3 times,
3 times.
right?
Yep.
The house is still sitting there. No more payments are being made. The
And
balance
meantime,
is
the
approved.
Market is dropping.
Market's dropping.
The
No
market's
more
dropping.
payments being made. The debt balance is going up. It's just
Yep.
not a good situation. So
No.
don't assume that you're going to have a magic answer.
Mm-mm.
So the way we did it, as opposed to the way you did it back then, and I still encourage you to do this today, because I don't think it's worth your time to
Mm-mm.
manage short sales. That's not it's not part of your scope of business.
No, it's horrible. Yep.
It really is a bad thing. So we have an attorney named Tom Abraham. And what Tom does is he comes in as a lawyer on behalf of the debtor, seller, and he gives them alternatives as a lawyer, not us as realtors, as a lawyer. And he
Mhm.
comes up with some pretty clear stuff. Oftentimes, Tom will have an investor entity that he probably controls make an offer on the property, and then his team will go negotiate that offer as a lawyer for the seller, and they get the bank to accept that offer. Then he calls Joe and says, "Hey, Joe, the bank is willing to take 235, so go ahead and put it on the market at 275. Let's see what happens." So now Joe can put it on the market at 275, knowing the bank's already agreed. We pretty much close it as a normal sale, but Tom does all the heavy lifting between the beginning and when the servicer agrees to the discount. All right, so that's
I wish I had known. I wish I had known Tom.
well, John Lum was a
Oh,
big part of that
oh,
in the
yeah, yeah,
office.
yeah.
So John and Tom and Scott and a couple others
Hmm.
literally had a meeting every Monday morning to discuss the status of every short sale.
Right.
Oh, that's why I'm gray these days from those short sale days, because I'd look at my pending contracts and I'd see how many pending contracts and have no freaking clue how many would close.
Yeah.
Because half of them were short sales. We had a special column. We had to mark they were a short sale, and I couldn't see if they were going to close or not.
Because
So the
we
message
never.
behind this is for vesting the contract. When you're getting a listing and you have a suspect that it's a short sale, don't assume it's going to be approved. You
Mm-mm.
need help. And you do not want to put this house on the market because nowadays it costs us $1,000 to properly market a house.
Right.
And you can't afford to spend it. Call us. We'll walk you through the process. I'll hook you up with Tom. He'll take care of you. He's going to charge the seller something. He is. He's probably going to charge them $500 a month or something. He's going to tell them to stop making their mortgage payments.
Right.
Then they're going to have an attorney representing them in this transaction, which is much better than a realtor who's really not skilled at handling short sales or negotiating with services.
Hmm.
Did we say that enough about that today?
Yeah, I think so.
That's
It just find us.
yeah. When you get a short sale potential, and I'm going to call it short sale potential
Yeah.
because it's not a guarantee anymore.
No.
Because the bank today, they might say, "I'd rather just foreclose." Talk about the PMI issue, Joe, that we talked about last night.
Yeah. So what I found out after all this was going on. So back in the day, they were
A
doing
lot of
mortgage.
loans did not have 20% down, so they
Right.
required private mortgage insurance.
So, yeah. So if you didn't have 20% down, you need private mortgage insurance. But they came up with this funky thing where 80% of the loan was a regular loan, and then 20% was a HELOC. So when they did that, they didn't need private mortgage insurance. But what happened is the banks went out and bought the private mortgage insurance on their own to cover their butt.
Mhm.
So when things were going belly up as a short sale,
Yeah,
banks were kind of delaying that because the insurance didn't kick in unless it was foreclosed. it didn't kick in if it was a short sale.
Yeah, so they go to the second mortgage HELOC and say, screw you, we're not giving you a penny. And they said, screw you, we're not signing off. And they said, fine, we'll
Yeah,
foreclose. And
yeah.
we'll get the insurance money from the lender, from
So
the
it took
mortgage company.
there was one instance where I had a short sale. I literally sold it 4 times, and finally the bank that was a year, and they had enough time at that point to, you know, foreclose on it, and they foreclosed on it. And there was some equity in the house, but it was a shame. The owner was cooperating to get a short sale. It's just the bank wasn't. And later, that's why we found out. So the bank never loses, is what my statement was last time.
The house never loses.
The
All right,
bank
last two things real quick. At 10 o'clock this morning, Chris and Jimmy and our continuing the Beggins Way training, if we want to call it that.
right.
They're doing Moxie training. It'll be a full recap of what Moxie does.
Hmm.
Everybody's invited, but it's specifically for the 90-day, less 90-day hires. But if you need a refresher, that's today from 10 to 12. It's on the company calendar. You can see it there. It's in this training room at 10 o'clock. And the last thing Joe asked you about what your business is like right now, and you made a statement that the bench setters are coming back.
Yeah, yeah. And in the last 3 weeks, I've had two clients who kind of postponed their buying when the market got kind of crazy, and they're now coming back. I just closed one yesterday, and then I have another client that I'm meeting on Sunday who's now back in the game, and they went back and got their pre-approval, and they're ready to go. So go
So
back
the
to those
message to
people.
me, message to you from me on that is called lead follow-up. And that's pretty much
Yes.
what I'm going to talk about on Real Life Real Estate on Monday. I found this whole series that I'm really liking. And it's critical that your lead follow-up skills get better and better and better because
Hmm.
you've got a pipeline if you've been here for a couple of years of people, and it's so easy to reach out to them. And occasionally they do. I finally got one guy yesterday who called me back. I mean, I'm talking like phone, email, text. And they give you fake email addresses and then they get interested and they text you back and they say, by the way, your email bounced back. They give me a different email address. And oh, it's crazy. But when they're ready, they're ready. And you
Yeah.
don't know when they're ready unless you're talking to them and you're not top of mind because they're just a lead.
Right.
So lead follows can be really important. We'll end with that today, but that covered the 7 topics I wanted to cover.
5 closings are Jennifer and May. Hot dog. I know where I'm coming for lunch.
There you go. 3 hot dogs. All right, everybody. Happy
All right.
Friday. Enjoy May. Happy May. Happy May Day.
Take care. Bye, everybody.